With a temporary agreement in the federal government shutdown, is the spring thaw coming? Is everything in the stock market roses? Maybe not. Let's take a look. Before we talk about the stock charts, I want to show you two other charts, beginning here with the S&P 500 with an overlay of the S&P forward earnings per share. And as you can see, there's a disconnect that occurred in mid-December, where the S&P 500 bounced and rebounded, whereas the S&P forward earnings per share continued its trajectory downward, beginning there in late November. So you ask the question, why is the S&P 500 heading up when the forward earnings per share is heading down? Well, this next chart has an answer. And as you can see here, the S&P 500 overlaying with the global central bank balance sheet. The balance sheet bottomed, say, in late October, early to mid-November, and started heading up, and then passed the S&P 500 as the S&P 500 was correcting in mid-December. The central bank balance sheet continued to expand in December through 2019. And in my opinion, that is what's helping float the S&P 500. So now let's go to the charts. We're looking at the 1-year daily chart on the spiders, and I'm using a 1 year because I want to go back to early 2018 and use that correction as reference. And so simply let's take a look at early 2018. We had the bottom at that point. We had then the recovery, a small contraction, another recovery, and then another test of the low here. So basically, we had the same thing happen there beginning in late October. Is the bottom there. We had a recovery and then a small correction, a recovery, and we came down to this point here and fell through that floor. And that floor was more or less in line here. We fell through that. So now we've had the rebound and the recovery up to this level here. So the question is, where do we go from there? Well, let's go back into early 2018 for reference. So off of this bottom here, we did have a recovery. And what I've been looking for the last week or so is another contraction for kind of a third test of that low. So we're up here. We may continue on a little bit, but I'm looking for that test. I was thinking it was going to be this week late or into next week. So with today's news, maybe that's going to be pushed for another week or so, but we'll see. So at that point here, we're going to come up maybe a little bit longer, and then I'm looking for a retest back at that level there. We could even go down further, but that's okay. I just want to see a retest, a successful retest. Now we take a look at the MAC. The MAC here is heading on up. It's getting up to that 2 level with both the fast line and the slow line above 0, where it was much of this period from here through here. So it's an extended period and it can stay up there for a while. But we just got back into that territory. So it still has a little bit of momentum. It hasn't run out of steam yet, but I'm looking for a little bit of an exhaustion to come here relatively soon. I am hoping, say, next week, the week after now, postponing because of the temporary deal in the federal government. We can see here in the histogram that things were rounding off, topping, and heading on down, but I think that will give a little bit of reprieve again by the temporary agreement. See here the price rate of change. We're up in this level here where we haven't seen that going all the way back a year. So it's had a big move from here all the way up to here. It attempted to move through the slow line. It reflected off. It's going to come back up here, and then we're going to have another attempt at a downward move through the slow line, hopefully in, say, a week or two. We'll just have to wait and see on that. Into the relative strength, we're at a moderate level, 67.62, and we were up in these levels plenty of the time, say between that period again and this period here. So not unusual that we're going to be up in this level here. We'll have to wait and see what happens there. Now, looking at the stochastic, that gives us a little bit of an idea that things were topping, but we came down through the slow line and we moved back up here to this point. We'll see if next week the fast line moves through the slow line. It's not a real big deal if it does. Several occasions did that happen, say here, maybe here, perhaps here or so. So it's not uncommon to see that. But we've been in this upper level territory, in this overbought territory for quite some time, and I think that's going to exhaust and want to head down as it did in each of these other occasions. So I'm thinking that's going to be coming down a little bit here, and that's going to be that retest that I'm looking for. We have a general trend downward in the volume, except for a little bit of spike here in those past few days, and maybe today was a spike or so, but the general trend has been downward, and that's not necessarily good. Looking at the Williams definitely showed an exhaustion up in this level here above the -20, but we do have a backside spike coming up. That's a little bit of sawtoothing, and we'll just have to wait and see what happens there with that. But again, that's not unusual, such as say this period there and this one here and this one here. But they all have kind of a decline in them. So maybe this one not so much, but we'll see if this has a decline, because I would expect this to exhaust and head down and find that correction territory, that retest territory on the price chart here that I'm looking for in this area here. I'd like to see that, and then that would give me the confidence to go back into the market. So I'm just going to ask you to continue to be patient. We'll just have to wait for this. Let the market hand you the opportunities. Now, tomorrow, I'm going to have another look at the markets from the fear factor, or the VIX. That's an opposite or reverse look at what's happening in the market, and that can give you some ideas of what to expect in the future as well. So for today, that's ChewDog Charts. Thank you.